The backend just flagged this. NASDAQ shed 500 points today, and the 30-year yield actually eased with it. Bonds caught a bid on an equity flush. That's the anomaly. The number one stock the scan surfaced on this session, still ahead. SPX closed lower for a third straight session, and the NASDAQ dropped hard, 500 points down on the day. Both registered daily bearish momentum reversals on the close. VIX ticked up to 15.84, still under 16. The market's not panicking, it's draining. And it all happened without the bond market breaking, which makes the macro picture much stranger than it first looks. The 30-year yield actually eased on the session. TLT caught a bid while equities were selling off. That's the divergence the backend flagged. The 10-year sat near 4.7%. DXY is the other signal. Speculative positioning on the dollar is at historically crowded extremes, a condition that doesn't tend to resolve quietly. With the dollar this stretched, what energy did today is worth a second. XLE was the standout today. It ripped higher on a risk-off session, and the system flagged that sector divergence immediately. Strait of Hormuz supply risk drove crude sharply higher, and XLE and XOP both caught the move. Crack spread leadership backed it up. This wasn't just a headline spike. There's structural confirmation in the data. That same geopolitical current is exactly what shook up the metals picture next. Metals broke today. Gold and silver both sold off hard. Silver down more than 3.5%. Gold down about 1 7/10. That snaps a strong August climb for both, and the yield environment is the pressure they're reading. Copper's sharp pullback is the scan's industrial demand question mark. When copper drops that fast, it's asking whether real economic demand is softening. That crowded dollar signal from the macro readout is showing up in metals too. And the same dynamic is exactly what international markets are absorbing right now. International markets took a broad hit. De-risking swept through EFA and EEM as the expired US-Iran truce talks kept geopolitical risk elevated. Asia Pacific took the sharpest end of it. EWT and EWJ, Taiwan and Japan's semiconductor-heavy benchmarks, faced significant selling. The system flagged this as broad deterioration, not isolated pockets. That same global risk-off signal is running directly into crypto. Bitcoin is at a structural crossroads, the backend flagged clearly. BTC is holding above its key support zone. Multiple capitulation indicators are active, but the bounce has stalled at Fibonacci resistance, and spot buyers haven't followed through. The chart and the on-chain story aren't agreeing. That's the conflicted setup the system surfaces, not a verdict. That conflict is exactly why the scans filter matters, and the number one ranked stock is still ahead. The divergence from the cold open, NASDAQ shedding 500 points while bonds caught a bid, that's the environment this scan ran in. The number one stock is still ahead. 57 symbols went through SignalFinder Pro's best of best filter, and the system flagged 3 leaders. Here's the readout. The sector scan ranked energy at the top, healthcare second, and financials third. All 3 closed green on a broad risk-off day. XLE's move is the one the system already flagged in the energy readout. XLV's setup is quieter, but it's there. And XLF held positive ground. 3 sectors posting gains on a down session. That's a breadth data point the backend doesn't miss. The system's top-ranked ETF today is ARKG, the ARK Genomic Revolution ETF. And here's the interesting part. It closed down about 2% on the session. This is a high beta genomics and biotech basket that topped the ETF rank on a risk-off day. The scan rank set up quality, not daily gain. And on a day like today, that distinction is doing real work. Signal state is weight. The chart's on screen. Today's top-ranked stock from the best of best scan is TEAM, Atlassian. It closed higher on the session while the NASDAQ was dropping hard. A software name holding green against a broad tech flush. That's the divergence the backend surfaced. When the whole sector's being hit, one name isn't. Signal state is unknown. The chart's on screen. The cold open anomaly turned out to be the day's real signal. NASDAQ flushed hard while the 30-year yield eased, which means the selling wasn't rate-driven. It came from somewhere else. The thing to watch tomorrow? Does the NASDAQ confirm that bearish momentum reversal, or does a gap fill back toward overhead resistance? Verify both ARKG and TEAM live in SignalFinder Pro. And remember, this is educational, not financial advice. Do your own homework.